Will I pay capital gains tax on my home sale? We're going to jump right in and talk about capital gains and how it may or may not affect you when selling your home. Thank you so much for clicking on our video. Here at Fisco Real Estate, it is our goal to help homeowners to be informed as they navigate through selling one of their most expensive assets. This video is going to discuss capital gains taxes and when they apply in the home selling process. Before we get into the answers, I want to make sure that we explain what capital gains taxes are. Capital gains tax is a tax that is imposed on the profit you earn from selling an asset, such as a home or investment property. Typically, home values rise over time, so when it comes to selling a home, capital gains tax may be applied if you sell the property for more than what you paid for it. Now, there are a few rules and stipulations that we're going to go ahead and discuss, but beforehand, please note I'm not a tax advisor, so please consult with a tax professional for any additional questions or unique circumstances to you. Section 121 of the exclusion in the tax code indicates the following. You are eligible for the exclusion if you've owned and used your home as a main home for a period aggregating at least 2 years out of the 5 years prior to its date of sale. You can meet the ownership and the use test during 2 different year periods. However, you must meet both tests during the 5-year period ending on the date of the sale. Generally, you're not eligible for the exclusion if you've excluded the gain from the sale of another home during the 2-year period prior to the sale of your home. In essence, this means that if you've lived in your property for 2 out of 5 years and have not sold another home during that time, you may qualify and be eligible for an exemption on capital gains. Now you may say, that's great, Jesse, I qualify. Is there a limit on capital gains? And the answer is yes. In the United States, individuals may exclude $250,000 of capital gains on the sale of their primary residence if you've lived in your home, once again, for 2 of the 5 years. You can file a joint tax return and may be able to exclude up to $500,000 in capital gains as well. If you don't meet the requirements for the exclusion, you may be subject to capital gains tax on the sale of your home. Something important is that the tax rate will depend on your income and the length of time you've owned the property. It's also important to note that you may increase your tax bracket for the year if you sell a home and are required to pay capital gains taxes. A professional can give you more advice on this matter. It is extremely important to discuss with a tax professional or financial advisor to determine your specific tax obligations and plan accordingly if you are considering selling a home outside of the mentioned criteria. Thank you so much for watching. For more informative videos, please like and subscribe and share this information with your friends. Have a wonderful day.